ERISA compliance is a critical legal obligation that affects virtually every private employer offering benefits to their employees. Getting it wrong can result in severe penalties, including fines of up to $2,670 per day. Understanding these requirements is essential for protecting both your business and your employees. The Employee Retirement Income Security Act, or ERISA, establishes federal requirements for employers who offer welfare and retirement programs. Enacted in 1974, ERISA aims to protect employees from mismanagement of their benefit plans by setting minimum standards and ensuring transparency. ERISA applies to most private employers offering health insurance, retirement plans, and other benefits. Government entities and churches are generally exempt from these regulations. If you're a private employer providing any type of employee benefits, you likely need to comply with ERISA. 3 federal agencies oversee ERISA compliance. The Department of Labor handles reporting, disclosure, and fiduciary responsibilities. The Internal Revenue Service enforces tax-related provisions, and the Pension Benefit Guaranty Corporation provides insurance for certain defined benefit plans. ERISA covers a wide range of benefit programs beyond just retirement plans. These include medical insurance, disability coverage, paid time off, training programs, daycare assistance, scholarship funds, holiday pay, and more. However, certain payroll practices and non-required plans may be exempt from ERISA regulations. One of the most important aspects of ERISA is the concept of fiduciary responsibility. Employers and plan administrators who exercise discretion over plan management are considered fiduciaries. This means they must act solely in the interest of plan participants and beneficiaries, not for their own benefit. Fiduciary duties include acting prudently, diversifying investments to minimize risk, following plan documents, avoiding conflicts of interest, and ensuring reasonable plan expenses. Breaching these duties can lead to personal liability, which is why many employers hire outside professionals to help manage their benefit plans. ERISA compliance involves 3 main components: disclosure, claims processing, and reporting. For disclosure, administrators must provide all relevant plan information to employees, including coverage types and financial reports. For claims, companies must establish clear processes for handling and explaining claim decisions. For reporting, businesses must routinely file documentation with the Department of Labor. Benefit plans fall into 2 main categories under ERISA: welfare plans and retirement plans. Welfare plans require providing all insurance contracts to enrolled employees. Retirement plans face stricter requirements, including making information easily accessible, sending documentation directly to employees, explaining how to claim benefits, and demonstrating investment diversification. Common ERISA violations include failing to provide summary plan descriptions to employees, missing Form 5500 filing deadlines, having inadequate claims procedures, lacking proper documentation, and committing fiduciary breaches like self-dealing or improper investments. To maintain compliance, employers should follow a practical checklist, maintain updated plan documents, distribute required notices to employees, file Form 5500 annually for applicable plans, review and document fiduciary procedures, conduct regular compliance audits, ensure written plan documents exist for each covered benefit. Maintain a trust for plan assets if required. Confirm non-discriminatory eligibility and benefits. Implement proper claims and appeals procedures. And retain ERISA-required records for at least 6 years. ERISA requires several specific disclosures. The summary plan description must be provided within 90 days of coverage. A summary of material modifications is needed when plan terms change. The summary annual report provides Form 5500 information to participants. Fee disclosures are required for participant-directed investments. And various notices related to COBRA, HIPAA, and the Affordable Care Act must also be provided. For health plans, specifically, ERISA compliance includes proper plan documentation covering eligibility, benefits, exclusions, and claim procedures. It also requires adherence to HIPAA regulations protecting health information, COBRA requirements for continuation of coverage, and clear processes for handling claims and appeals. The penalties for non-compliance can be severe. Failing to file Form 5500 can result in fines up to $2,670 per day. Not providing required disclosures can cost $110 per day per participant, and fiduciaries can be held personally liable for losses to the plan resulting from breaches of duty. ERISA compliance may seem complex, but it serves an important purpose, protecting employees' benefits while providing a framework for employers to follow. Most employers benefit from working with ERISA attorneys or third-party administrators to ensure full compliance and minimize risk. Understanding and implementing ERISA requirements is not just about avoiding penalties. It's about fulfilling your obligations to your employees and ensuring they receive the benefits they've been promised. By maintaining proper documentation, providing timely disclosures, and fulfilling fiduciary duties, employers can navigate ERISA requirements successfully and protect both their businesses and their employees.